Our next guest says he's not surprised at all by the mortgage mess. In fact, he says he saw the problems connected to an overpriced real estate market coming years ago. That's because he's a real estate appraiser. Joe Milkes of Milkes Realty Valuation joins us now from Dallas. Joe, you're an appraiser. You put a value on homes. You work for the banks to put a value on homes. How come you saw this coming?
Well, I think many of us in the industry saw that there was a huge wave of money for lenders to put in the market, and when the market becomes flush with money, sometimes it creates an exuberance in buying habits, also leads to aggressiveness in lending habits.
Well, are you saying that you were asked directly to put a higher value on a house that you appraised so that the lender could lend more money? Is that what happened?
Yes, that happens. I wouldn't say it's all the time, but it is frequent. Appraisers frequently feel pressured to value the property for more than it's worth.
Who pressured you?
Well, sometimes it comes from agents that don't understand the process of underwriting and the need to properly underwrite the loan. In other cases, it's from mortgage lenders. Many people got into the industry with this latest wave of lending who didn't have the background or the ethics or standards the old-timers have in the industry.
Did borrowers know what they were getting into?
I think in some cases they did not. They didn't realize what was happening, and they were the victims in the situation. In other cases, they may have been part of the problem, that they were highly motivated to buy the property, regardless of whether they were paying more than market.
Appraisers, though, should not have bent to the pressure.
I agree with you. That shouldn't happen. I think the difficulty is that many appraisers have small businesses. They have a very limited clientele of very large lenders, and they know that in some cases, if they don't get the values they want, they'll be out of business, and next thing you know, they'll be losing their house too.
So
I would say many of them stand up to it.
Okay, you're saying, look, there was a flood of money coming out of Wall Street. I mean, the real estate market just flooded with money, and there were plenty of eager borrowers, and that created a bubble. That's where the blame lies.
I think it was a combination of factors: the flood of money, the competitiveness among lenders to put the money on the street, some of the loan types, interest only, what's known as liar loans, where the buyer's financials are not confirmed, where there's no equity going into the property, made for a very difficult situation that would be vulnerable to downturns in the economy. Stuart, you've got an economic background, so I'm sure you're aware of supply and demand.
Yes, sir, I am. I'm just wondering how you put a value, an appraisal value, on a house when the market price is falling rapidly. I mean, that's a story for another day, but I'd like to get you back and discuss that. What's a real appraised value in a downside market, not the upside of a bubble? Joe Milkes, a pleasure having you with us. Please come back. Appreciate it.
Thank you.
And Stuart, something else that is going to be revealed as the months move ahead is the amount of borrower fraud that went on. Because I keep hearing stories, and it'll curl your hair.
6 of one, half a dozen of the other.
I know. We'll be